We do now want to stay in that space here with commodities really on fire. A bit of a pullback today in gold and silver. Copper still pushing toward record highs. And a lot of questions as to, well, just how far this rally that we've been seeing in metals can go. Who better to talk to than Timna Tanners, Managing Director and Senior Equity Analyst over at Wells Fargo. Timna, great to see you. It's been too long.
Thanks for having me.
What is going on with metals? And by that, I mean, what is actually driving this? There's been a lot of speculation as to whether this is part of some broader debasement trade, whether this is just maybe a bet on economic conditions. I mean, what do you think is sort of the fundamental reason why we're seeing so much interest in this?
So I think you hit the nail on the head. There's fundamental reasons, and then there's other reasons that have to do with the macroeconomic sentiment and other factors. From our vantage point, this is kind of an unprecedented environment of a shortfall in copper that's been long anticipated, but was brought forward by several high-profile interruptions. So the copper market is actually in shortage conditions, anywhere from estimates of 300,000 tons to 800,000 tons this year of a, say, 26 million ton market. So it gets tricky to forecast exactly where copper can go because there is no one who can make up that copper supply, right? So you have to see substitution, you have to see alternatives. Yeah. Aluminum, similarly, is seeing an unusual shortage in supply and generally strong demand as well.
Talk about the interplay, though, between that mining and I'm specifically talking about the mining side of it with copper relative to precious metals. There's been some discussion here that at least for those companies that are doing both, that there might be more incentive to put a little bit more attention into precious metals at the expense of copper. Is there any sort of credence to that?
Look, I think when you're talking about gold and to some extent silver, there's a debasement trade. There's a dollar concern. There's all sorts of factors that are causing a buying of gold, but that I don't think that can translate necessarily to hoarding of copper, right? Copper is going to respond. There's just a different dynamic for copper demand than there is for gold demand, and it's not quite the same. So I think there's been a bit of what we've seen in terms of fund flows and ETF appetite for commodities in general, but I do think there's more risk that if you see a big run-up in something like copper, aluminum, even nickel and iron ore, et cetera, you get replacement, you get substitution, which you don't necessarily get in gold.